What does 2025 look like for the Atlanta housing market? We're going to break down all the top predictions as well as throw ours in too. Also, we're short on inventory, but that is really changing here. And we're moving into a buyer's market. But how do you, as a real estate professional, navigate that to the best interest of both our buyers and our sellers in this market?
And finally, we'll look at mortgage rate, modular housing, insurance rate, and do solar panels add value? This is Real Estate Backstory, and my name is Ming Richardson. I'm the compliance broker for Maximum One Realty and Realtor Partners.
And my name is Alan Mitchell. I'm the managing broker here at Maximum Realty and Realtor Partners. We want to jump right into our 2025 predictions here. And so we've kind of amassed, most of the big boys out there, what they're looking at for 2025. And so first one we want to kind of jump into is what's happening with mortgage rates. And so Realtor.com or Realtor, overall is looking at mortgage rates of around 6.2%. We think that that's a little bit high. Redfin, on the other hand, is it predicting
7%?
I don't see that number really kind of coming in.
Well, it can be, but the problem is going to do a lot of damages to our housing market.
Well, and Zillow, all Zillow is predicting for mortgage rates is that it's turbulent, right? And so we've seen where mortgage rates came down again this week. We see mortgage rates heading into the lower sixes into the high fives. Part of that is there's a lot of uncertainty in the market right now, just with the new administration coming in. The whole idea of tariffs scares everybody. We really do see that things are going to start settling out. We've already seen where things are settling out. The Fed is probably going to be lowering interest rates again before the end of this year. Correct. They have several reductions going into next year. So we're kind of looking somewhere in that low sixes into the higher fives.
Hopefully.
But again, especially when you go into mortgage rates, nobody has a crystal ball, right? Now, overall home sales, Realtor is looking at 1.5% increase, which we think is really, really low. NAR, National Association of Realtors, is predicting 10%. Redfin says somewhere between 2 and 9, which is just huge. And Zillow is saying a prediction
around 7%.
Yeah, roughly 7%. Yeah. And so while we do believe this is going to be driven by mortgage rates, right? We kind of agree with NAR that about a 10% growth year over year is really like very, very expected, largely because we have such a huge growth in first-time home buyer population. Our millennials are all reaching first-time home buyer age.
Well, not only that, honestly, their demand for home has not been satisfied for the last year and a half.
A lot of pent-up demand.
The interest rate has been incredibly high to where affordability is an issue.
Well, that, and when you put on, and we'll share this in a minute, what's happening with inventory, we really do think that 10% is a really kind of a modest figure for moving forward. Now, what about home values, right? So Realtor says they're predicting home values to be somewhere around 3.7%.
National Association predicts around 2%.
Redfin around 4%.
Zillow 2.6%.
Us, we agree with basically everybody. Yeah. We're looking at somewhere in that 3 to 5% property value appreciation, at least for here in Georgia. I know that some states across the U.S., they'll see property depreciation. Other places will see really high growth. We see that here in Georgia, we're going to be somewhere in that 3 to 5%. And honestly, that is so healthy. We're really, really glad to see that. Like nationally, for the last 50 years, property values have appreciated about 4.4% a year. And so we are looking at it being very, very normal.
Conservative too.
Yeah. And that's good. Some folks will be like, well, I wish there was a property, that properties would go down.
Correct.
But no one wants to buy properties when they go down.
When the value is decreasing.
Exactly. Now, overall inventory, what's everyone thinking the inventory is doing? So Realtor.com is looking at around 11.7% rise in inventory.
So that's great for buyer. NAR is looking at about 10%.
Redfin and Zillow said is they see inventory increasing. And so we agree. We're seeing more inventory now, but we also see that as inventory increases, we're going to see more buyers as rates moderate, which is going to eat. Yes, we're going to see inventory increasing, but then if you're going to have rising inventory, lowering rates and more buyers moving into the market, that's going to kind of hold us down on inventory some.
Correct.
So we kind of look at it like we see our inventory levels being kind of how they were pre-COVID,
pre-pandemic,
pre-pandemic,
basically.
yeah.
So we're still currently under pre-pandemic numbers, but we're looking at those numbers increasing to what it was prior
by
to.
Much, right. Now, there's a few other predictions that are out there that we do kind of want to put our 2 cents in. First one is that many Americans are going to continue to rent.
And the reason being is that, rental rate has dropped. So
Yeah.
therefore, it is more affordable. And I hope the renters are using the difference in the rental rate to save some money.
Save some money for your down payment.
Absolutely.
Yeah. It's a big deal. And so do we believe that, or do we know that it's cheaper to rent right now? It is.
It is.
But wealth in the United States comes from home ownership. So either you're part of that or you're not, right? Another prediction is that home building is going to increase, but
expect smaller and more affordable.
And we agree 100%. We're seeing that already. We're seeing townhomes, condos, tiny homes, smaller homes. For the builders, it's really about affordability. The big McMansions, those are out, right?
Once again, affordability. Will there be folks in that market? Absolutely. Yeah. There always are. But the volume for that market is a little slightly lower than your first-time home buyer.
Now, there are several portals that expect that high-end sales will see compensation decline. And I tend to agree. I think that, those $1 million listings with the folks with the high heels and the big booties and the ridiculous amounts, I don't see that kind of maintaining. We don't see overall compensation changing for the vast majority of agents because, as long as we provide value and we show that value, we aren't seeing that happen now. One prediction is that we're going to see more buyers markets. We agree. We see that happening also.
And the others, pet-friendly lists will be non-negotiable. So a lot of folks love their pets.
Well, you got to realize that more buyers and sellers have cats and dogs than have children now. So like the idea that you can't take pet friendliness and that kind of thing to be a deal, that really is a big deal.
It will hurt you.
Yeah. And then last thing is that more people are going to embrace small home living. But we agree. We just see that really as an indication of affordability. Yeah. Affordability is going to be the big deal there.
So right now, Freddie Mac, U.S. housing market is short around 3.7 million units.
Yeah, they just released this and said, overall, the current housing stock's about 147 million. We're, needed is about 150.7. So that puts us around 3.7 million short. Now, where is that compared to where we've been? Well, back in 2018, we were short about 2.5. 2020 was around 3.8. It's basically the same as it was in 2020. So we haven't grown any housing stock because we've had more people moving into housing than we actually have been selling. But that being said, we are seeing rising inventory. We don't see enough houses overall, but we are seeing rising inventory. If you look at where rising inventory is, look, we are not where we were in 2017, 18, 19, but we are definitely higher than we've been in 2020, 2021, 2022, and 2023.
Correct.
And so moving into this year, we're just seeing where inventory is rising. And so overall, if you look at where we are now, on just total
November
inventory.
last year.
November last year to November of this year, right? We're up almost 40%. We're
in Georgia.
Here in Georgia, right? Some states are flat. Some states, it goes all over. But real estate's local. And for us, if you just look here in Georgia, it's 38% higher, more inventory this year than last year. That is a big, big deal. But where were we?
Compared to pre-pandemic, so we're still negative around about 8%.
Yeah.
So as far as compared to 2019, we're still low, but the inventory is rising to meet more your
Well,
demands.
and that's what we see. We saw even earlier this year, even though we saw inventory levels up almost 50% this year versus last year, we were still down 30%, 27%.
Mhm.
We're seeing that number continue to decrease. We're seeing inventory work its way up. And so yes, we are still down 8%. We see inventory levels starting to come back up. Like we said earlier, into that 8%. Into that flat level.
So
So
in August of 2024, only 4 states have returned to or surpassed pre-pandemic 2019 active inventory level. So in September 2024, it grew to 7 states. So that's the difference.
yeah, and now all of a sudden they're predicting that there's going to be 4 new states that jump into the level, the folks that where pre-pandemic matches up. Alabama, Nebraska, Hawaii, and
And Georgia.
us. And so we see that same trend kind of going through. And all that is what we're seeing is in our market, we're shifting to a buyer's market. And
Versus seller.
and that's a really, really big deal. You got to understand that for the vast majority of real estate professionals, they've not seen a buyer's market before. It's always been a silent.
Well, buyer's market was down during crash, around 2008 to
Well,
to
we haven't
2012.
seen one since 2014 is the last time. And so, if you as a real estate professional were not in the business 10 years ago, you haven't seen a buyer's market,
Mhm.
right? And now we've been through several markets, we're no spring chickens. But that being said, you have to understand some differences in buyer's markets versus seller's market. With the seller's market, inventory is tight. With a buyer's market, more homes are on the market, giving more people more options. Right, exactly. With a seller's market, days on market, much tighter, right? With a buyer's market, homes are going to take longer to sell, right? And so, like with a seller's market, competition is what drives the seller's market, the values in properties higher.
Just like what happened during the pandemic.
Yeah. And so in a buyer's market, we're going to see less competition, right? And so the days of being like, well, I only got 5 offers on that house, I'm going to wait until I get 10. You only need 1, right?
Correct.
So, in a seller's market, the negotiation power is really, really high on the seller's side. Not so much, but in a buyer's market, the buyers have a lot more power through the negotiations, right? And so, are we in a buyer's market right now?
So it depends on price, location, and condition of your property. So overall, the Atlanta MSA has shifted into a buyer's market right now.
But that's overall, right? Because are you in a buyer's market in Sandy Springs versus Griffin? It's different. Exactly. So, and then homes that are listed for $150,000, that's a completely different market than it is for 800,000, right? And so we are seeing that those kind of things
and location matters.
And but also condition, right? Mm-hmm. There's a lot more condition. A lot more demand for properties. We have a lot of demand for fixer uppers or low priced homes and that kind of stuff. So, but you got to understand that this isn't just about buyers and sellers in this market. This is about real estate professionals.
Correct.
Right. And so like you as a real estate professional have to be ready to change your narrative to be able to discuss these changes and how it impacts. For a lot of listing agents, they've never had to discuss with their sellers how do we market and sell a property in a buyer's market as opposed to in a seller's market.
Correct.
Many of our buyers are suddenly getting a lot more negotiation power that they never thought they had the ability necessarily to ask.
More
repairs.
Can
we get the seller to buy down rates?
Yeah, minor items.
So there's a lot of considerations to be made about what you can do as a buyer's market as a seller's market. And so it really does kind of depend on how you're going to be moving that forward here. And so, like when you're buying in a buyer's market, right?
The advantage is time is your biggest advantage in buyer's market, where you do not need to act quickly to submit an offer.
Yeah.
So take your sweet time, deliver over your options, and when the time is right, strike an offer that naturally has contingency protections, particularly around the all important inspection time frame.
But
So,
let me throw one caution there, right? Good homes priced right are still selling quickly.
correct.
Please, even though we are crawling into a buyer's market, we aren't flying into a buyer's market. This isn't 2007 again, right? So you got to understand that, yes, time is more on your side. But if you see a house and it's priced right and it's in a
And
good
it's,
condition,
yeah,
look,
so
those
you want
houses
it.
are still selling fast. Don't think that all of a sudden, because like we're moving like a herd of turtles. Okay, we are not soaring in like eagles
Slow
into
and
a.
steady.
That's it. That's it. So yes, the buyers are getting more negotiation options, a little bit more strength in their offers, those kind of things. It doesn't mean that it's this big flip flop overnight. Now, for our sellers, when you're selling in a buyer's market, right? Price really does become so important. The idea of
It
I'm going to
is.
throw my listing out there at this ridiculous price and think somebody's going to be coming through it. It's not. The days of just let's just throw it out there and see what happens. Those are gone. They really, really
Absolutely.
are gone, because those properties are just going to sit there, and then everybody's going to say, "What's wrong with the house?" For our sellers have to understand and be willing to negotiate. For the past 10 years, sellers have not had to give on concessions. Sellers have not had to give on price. Sellers have not had to consider buying down rates and making additional repairs and doing home warranties and all these kind of things. Like if you as a seller, I mean, in representing your sellers, we have to prepare them for that. Don't wait until all that comes in
Right.
on when a purchase and sale comes in, and then they'll be like, "What's going on? I expected to get full price." And I'm not saying they can't get full price. That full price is going to be really dependent on did you
The whole
actually price it
package.
right?
Right.
You know?
So, buyer may be willing to offer a full price,
Yeah.
but they may want a lot of concession for that full price.
Yeah. And then last thing is, as a listing agent, the days of doing the listing agent basic four, where you just shove it in the MLS, you put a sign in the yard and a lockbox on the door, and then just pray, sit back and pray. Those are done. You have to be looking at how am I going to market this property to get the most exposure, to bring this in front of the most buyers' eyes as possible.
Absolutely.
This is not the time to be the passive listing agent where all you do is just enough to get by, because the market is going to eat you alive right now.
Absolutely.
So like that's so important in moving forward. We just want to kind of prepare you for moving into this buyer's market. You need to change your scripts, your narrative, these kind of things. It really is a very
you need
big
to
deal for you.
explain it and explain to the seller and the buyer what the market's doing.
Yeah. So the jobs report came out last week,
Mhm.
and the good news is mortgage rates fell a lot more than they thought they would, and so we're starting to see mortgage rates working its way back
Thank goodness.
down, right? And so, but the good news here is, even though mortgage rates didn't come down like drastic, right? And they're not going to, right? Mortgage rates did come down. We're gonna continue to see that move forward. But even though it was just like it kind of jumped down, right? Purchase applications are up 12% over the previous,
Which is great.
Yeah, over last week. Now, purchase applications are up 52% over last year.
Last year.
So as a real estate professional, if you're like, you know what? It's the holidays, rates aren't great, I don't need to reach out. You are shooting yourself in the foot. 52% higher purchase applications this year versus last
same
year.
week
right?
last year.
So also just we are looking at the Fed. The Fed's going to be meeting next week.
Fingers crossed.
Yeah, we're looking at another quarter point drop. It's kind of what we're kind of expecting out there also.
Another interesting factor is that manufactured homes are appreciating faster than the site-built homes.
So modular homes are growing value faster than the traditional homes.
I do think modular homes not what it used to be when we grew up.
It's
a lot prettier with a lot of curb appeal.
Well, and as a real estate professional, the reason we're trying to bring this up is, so many people have this stigma about modular homes, like, ew, modular homes, that kind of stuff. Look, they're growing in value much faster than regular homes. They're not your grandparents, modular home, a single wide on a redwood deck kind of thing. And the other thing is we as real estate professionals, we have to understand that, a house is what our buyers want it to be. And we can't, pigeonhole our buyers. And this is what the homes today are like this.
Correct.
It may be a modular home.
It may be a townhome.
Yeah.
It may be a condo.
There's so many
Tiny
options
homes
out there. And so it's just interesting to see that, a lot of folks will kind of down talk manufactured homes, but at the same time, guess who's sitting on the bank, right?
They are.
Many, right? So, like overall, from 2018 to 2023, modular mobile home appreciates at almost 80%. We've seen 40% property value appreciation, 50% property value appreciation, not 80%.
Yeah, well, back in 2018, the average modular home was about 70,000, and now it's around about 123 or higher.
We want to encourage you when working with your buyers, as well as even just reaching out and engaging with your property owners out there. Look, insurance cost is starting to eat folks alive.
It's huge.
Really, really big time right now. Insurance cost is rising at 3 times the rate of principal, interest, and taxes right now. Right now, up until 2021, overall insurance costs rose at about 3% a year.
But if you think about it, we have had a lot of natural disaster in the recent years. So, the insurance, I understand, got to recuperate.
Well, but that being said, it's not everywhere, right?
No.
In 2022, insurance went up 6%. And then 2023 and 2024, it's gone up 11%. Now,
Huge.
we are better here in Georgia. We don't have, like Florida, California, those kind of places, earthquakes, fires, hurricanes,
tornadoes.
All these kind of things go, really impact those rates. We don't have as many of those issues here. Doesn't mean that it's not impacting us too, because they're spreading some of those principles out. Really, where we're coming at is be ready to shop rates. Encourage your buyers to shop rates. We've seen where buyers are expecting to pay one insurance rate, and it's making deals challenging because
absolutely
the values that we put in are not really looking at the same thing. So, hey, what's going on with solar panels? Everyone wants to talk about solar panels, but you got to understand the impact that really has in home values. Now, we are not anti-solar panels. I don't have I don't have anything against solar panels by any way, in any way. That being said, we really do need to look at the real numbers here of like what's really going on. And so there was one study that said solar panels on average, homes with solar panels sold for $15,000 more compared to homes without solar panels. Another one said that on average, homes with solar panels sold for 4.1% more. On average, the challenge for us is that we don't see that there's a cost-benefit analysis. At least here in Georgia right now, the cost to put them in is much, much higher. Now, Georgia also has ridiculously low number of solar panels going in. If you look like California,
which is number one
for solar panel permits, permits to put it on, almost 250,000, 276,000 permits for solar panels in California, as opposed to Georgia, which had 1,300 permits across the entire state. So definitely we are not at the forefront.
Right.
We're not leading it. I mean, we're not as bad as, say, Alabama, which only had 32 permits for the whole state, but we're not a whole lot better out there. So I get it. We are a little apprehensive here in the South, and definitely, out in the West Coast has definitely adopted much more of it, kind of thing. Like when you look at Arizona and Nevada and those kind of states, they really are really embracing this technology much more than we are. We're not getting into the debate. We're just trying to say, if you look at the cost benefit analysis of it, be very cautious about looking at that. Also, look at if you're going to finance solar panels, or if your buyers are going to finance solar panels.
Be careful with that because it may change your debt to income ratio.
Yeah, well, not only your debt to income ratio, but are you giving them a payment to move forward, right? And a lot of times, this is a big concern that if you go out and you put solar panels on your house, and you finance them over the next 10 years.
It's usually 30 years.
30 years. I
believe it or
mean,
not.
yeah, you may not be getting life out of that for the whole time. In addition to that, now they have to qualify for that new.
Well,
Basically, it's like a second
lender,
mortgage,
yeah,
right?
the lender's going to look at it. Your monthly expense is going to increase by $200 or $300, whatever the monthly
So it
payment
can
is.
throw all that off. So just be cautious. Again, we're not dogging them. We're just trying to say, look at all your numbers, right?
And also on the flip side of it, just so you know, some seller did not realize they will have to pay off that solar panel purchase.
Yep.
And sometimes they're looking at $30,000 to $35,000 in additional closing reduction from their proceeds.
So get more real estate tips, tricks, ideas by watching one of our masterminds that we have attached here after the video. We do this every week. We hope that this brings value to you. If we can be of any kind of service, please call, text, smoke signals, catch our live continuing education trainings. We teach every single week. You can find that on mx1training.com.
Have a great week. Have a great day.